Welcome back to the Business of Biotech. I'm Matt Pillar, and I'm here in the Life Science Connect studios with none other than the beast of the biotech budget, the ruler of the cash runway, the maven of the capital markets, my friend Allan Shaw. Allan, how you doing?
I'm doing well. Thank you for that wind up. I feel like I should be saying something as equally complimentary back.
There's nothing to say. Nothing to say. You know, we're marking a milestone today. Allan, do you know what the milestone is today?
I've heard through the grapevine that it's the 100th episode of the Business of Biotech.
100 episodes. Yeah, crazy, isn't it?
Where has the time gone? And congratulations, given that we're always focused on milestones, it's really nice to have a positive one. I don't know if you'll trade up today, but it's great.
Yeah, well, I hope so. I hope our numbers trade up. And that's I gotta applaud your segue there, because we're gonna talk about trading up and trading down, as it were, in today's discussion. But before we get into it, I got to thank you. I mean, I have to thank you. You know, when I reflect for a minute on this podcast, I started this thing 2 years ago. It was just over 2 years ago when this episode drops. And it was just sort of an experiment, It was an experiment because I was brand new to the space, and I knew that the best way for me to learn this space was to spend time talking with people who are innovating in this space, new and emerging biopharma leaders who are innovating in the space. And then we thought, you know what, if I'm going to do that and ask those people questions, there's probably a big universe of people out there who would be interested in coming along for the ride. So why not put it in podcast form? So we said, you know what, let's do this, right? Like fearlessly, let's just go do this. Let people listen in on Matt's inquisition, sometimes naive and uninformed inquisition of people who have been in the space for a long time. And Allan, you were my very first guest. You helped me kick this thing off. You've been on the show 12 times now, subsequently. I know at one point we talked about like, hey, let's do this monthly. And then, man, the runway just gets long. We get just jammed up with guests. But I've managed to get you to come back and spend time with me 12 times now. I just want to thank you. I mean, your episodes, look, I like you, the audience likes you, and you're really good for ratings. So thank you.
Thank you. I appreciate that. And I'm going to certainly share that little bit with my mom. I think that'll certainly make her day. So thank you for that as well. It's been fun, when we embarked on this, as you said, it was an experiment, and I've been really, I've enjoyed the collegial nature of the activities and being part of the journey that you've embarked on, and look forward to continuing the ride.
Yeah, well, good. I'll send you a snapshot of the stats so that you can prove to your mother that this is, that you've made a name for yourself among the audience.
And I appreciate that. It's funny. I tell my family, you guys may not want to listen to me, but apparently other people do.
They do. They tune in. Yeah, and part of the reason they tune in specifically to Allan Shaw episodes is because you've got a lengthy and a unique perspective on the space, and just kind of move into this conversation that we're going to have today. Since we launched 2 years ago, the roller coaster ride that is the biotech space, it's been a wild one for me, being new to it a couple of years ago, and now kind of seeing the ups and the downs. Just the wild ride that we've seen, particularly in the last 12 months. Makes me curious. Not having historical perspective makes me curious about your perspective on what's going on this wild ride over the past 12, 18, 24 months, if you want to go back to when times were, good and we were flying high. How does that kind of relate to the 20 plus years prior that you've spent in the space? What kind of cycles like this have you seen before? Give us some kind of historical perspective.
It's interesting when you reflect on these things. It's like platform shoes. Things go in and out of season, and it's certainly very cyclical. And we've certainly had a prolific cycle, It's almost like the economy. We've had a really wonderful decade as an industry. And as we've referenced in the past, if you go back prior to that, it was Death Valley. You couldn't do deals at all. And there's been a lot written about what needed to be done in order to sponsor that. And but people's memories are short. And, I would say, if you look over more recent times, it's kind of feels like the good, the bad, and the ugly. We've certainly had and continue to have, I'd say, the golden age of biotech. I think, we're on the precipice of incredible innovation. And I still think we're scratching the surface with where we can go and what we can do in terms of impacting patients, in terms of unmet medical needs, and making significant step improvements over what the current standard of care is these days. So I think that part of it is great. And I think there's still general interest and a lot of money for that. But I think, like a lot of things, I think as a society, we always seem to do things to the excess, and then until we break it. And I think, what we're seeing right now is just a byproduct of that. The pendulum, as a good friend of mine has said, and I may have even invoked this before, but the pendulum never stops in the middle. And, we've had good times. Now we're now into bad times, and it's probably needed. It's like medicine. Sometimes it doesn't taste so good, but for this to function right, you need to kind of weed yourself off of some of the excessiveness of that. And when you step back, money was free. And because of that fueled us, and it fueled the proliferation and the excessiveness. And now I guess we're going on a diet, or it's the hangover after the party, if you want to think of it that way.
Yeah. And when we talk about this this idea of the sentiment towards the biotech industry, you shared some data with me recently that kind of charts the decline in biotech sentiment, and that word is the word used in the report over the last year. And I want to try to put some hands around that, try to put some fingers around that and understand what the drivers of biotech sentiment are and what they mean. So how do analysts measure sentiment in this industry? What are the, I guess, hallmarks of general sentiment toward the biotech industry?
Well, I think you can go a lot of different places, and I think there's a lot of different drivers of sentiment. I think if you take a step back, it's money, right? It's the flow of money, and right now there aren't buyers. So, as a leading metric, we're seeing really the top, if you use an analogy, this tide was high, now the tide is low, and the tide is going out, and the flow of funds are going out, and there's just less people interested in biotech and life science in general. And I think you're seeing that as a rotation in assets, and it's driven by macro events as well. But I also think that, things that that we as an industry can control. We can't control some of the macro, right? We can't control Ukraine. We can't control interest rates, which I think is actually much more fundamental. They've effectively doubled since the beginning of the year. And, as I've often said before, interest rates is the canary in the coal mine. Once those things start to go up, people can get returns with a lot less risk. And so there's a mentality on risk. And when you think about risk, we already have an industry that has an incredible level of attrition, failure from a get-go. And when you start to see things that kind of suggest an increase in those industrial jeopardies, albeit regulatory, where the FDA is certainly seems to be becoming a little sterner, even recent action right now in terms of kind of enforcing and putting more teeth and hurdles in terms of accelerated approvals, I think are, exhibits of that type of environment. But I think, further to that, I think we're also seeing a lot of negative sentiment being generated just based on the industry's execution.
Yeah.
And that's manifesting itself in what I would say a much higher level of negative trial data.
Yeah. I want to back up to something you mentioned around macro events. And I was going to save this question for later, but I'm going to ask you now because you brought up the macro event, I guess, effect. And yeah, to your point, like Ukraine, interest rates, like things that are certainly out of our control. But there was a macro event 2 years ago that, on the heels of that macro event, biopharma industry was God. We were the heroes, right? Like we made miracles happen, global miracles in response to the pandemic. What happened to that? Why? What? How? Everybody was like, everybody acknowledged that this was a shining moment for, if you take the greater pharmaceutical industry as a whole into account, it was a shining moment for an industry that's on many fronts loathed by by the public. So what happened to that as a catalyst to to good times, to sunshine and roses?
I guess it hits the whole cliche of buy on the news, buy on the rumors, sell on the news. I think we kind of all benefited during that period of time, leading to the pinnacle of the vaccine. I think in that look at Moderna stock, it certainly took the ride. Still in a much better place than it ever's been, but it certainly it was a ride. And so I think some of it is simple asset allocation, right? Part of it is, as we said earlier, people's memories are generally pretty short. And also it's kind of in that spirit and vein, what have you done for me lately? And right now, when you start looking at, I would call it self-inflicted wounds and injuries, and that's our execution. Why are the studies being negative? And I think the dynamics have created a further set of dominoes, so that even when there's good news, people are using that as an opportunity to sell. They're saying, it's so hard to sell. There's so limited buyers that if I'm going to sell myself out of a position, I need to do it on a day that there's volume. So when a day somebody puts out good news, there's buyers, but there's corresponding sellers that kind of stifle it out. So the reaction is very muted. And that becomes very frustrating for companies because, and again, going back to something we said earlier, that they are still not necessarily attuned with where they are in terms of evaluation perspective. Everyone thinks that, I'm going to run my gas tank down, I'm going to be able to turn over cards, and then I'll be able to raise money. And then the sad reality is that they're taking an unreasonable amount of risk. I'm not sure if that's the right way to run a business. You should be always maintain adequate cash flow, whether you have data coming or not, for all the obvious reasons. So, I think that makes it harder, because then people, they're even if they're playing a risky capital strategy approach, I think they're not going to even get the benefit of taking that ill-conceived risk, because at the end of the day, they're going to wind up issuing stock at levels that they previously wished they didn't have to.
Yeah. I want to stick on the negative news events point for a minute. You mentioned, that a proliferation of negative news events kind of keep things tamped down. If you step back and look at the volume of negative news events, and first, I guess I'd clarify, by negative news events, we're talking, and help me add to this list, negative data readouts, right? Like bad data readouts. We're talking, bad news from regulatory agencies, perhaps holds, and so forth. What else maybe constitutes a negative news event that affects biotech sentiment? And anything on that?
I think you have captured the essence of negative news. It's really, a clinical setback, and that could be, efficacy, safety, the FDA putting a clinical hold on. There could be manufacturing issues as well. This could be lots of reasons, but I think you nailed it.
So if you look at this, if you, let's say that for, for the sake of this conversation, we're going to acknowledge that there's a trend, like that we're noticing a trend, that there seems to be more negative news, and you step back and you look at it. Can you put your finger on a cause, a reason? Generally, I know it's a super general question, and we can't analyze every biotech that's putting news out there, but do you see any general trends around what's driving negative news events?
I can certainly take a swag at it, right? I think
no one's going to hold you to it. I mean,
no, I appreciate that. I think it's kind of like art. I think if you uphold people, you're gonna get different perspectives from people on it. For what my 2 cents are worth, I think it's a confluence of things. Certainly, I think it starts with the number of companies that we've had, but I think it even starts back with some of the macro things that we were seeing about the flow of money. And, it was so available, it was almost free in many respects. So that was the fertilizer that you needed to create the companies at the end of the day. And with that, we've seen really an unbelievable proliferation, as we've talked on. So I think when you have loose capital allocation, coupled with what I would say brain drain, you needed to populate all these companies. And I don't think we necessarily had people who had seen it and done it doing these things. So I think you're increasing the risk of difficulty in execution with all of that. And I think that coupled poor allocation, inexperienced people, coupled with money being put to work. We're giving you money to do things, right? There's pressure to spend that money, right? If you're not if you're not spending, you're not executing, but if you make a wrong turn and you keep going down that road, it's still a wrong turn.
Yeah.
So, I think that all led to what I would call poor investments, poor capital allocations that were not cost effective. Which resulted in also higher burn rates too. I think one of the things that we're seeing now that adds to the negative news flow, I hadn't even considered it, but it's that what you're hearing now is companies that are laying people off, right? Mm-hmm. They're dialing it back because they did get in front of their skis way too much right now.
Yeah. That's an interesting dilemma, laying people off. And you just acknowledge that, there's a lot of cases out there where there's not the expertise, probably in the C-suite, but the expertise in the leadership and the veteran status that it takes to, create better outcomes. And I want to ask you another question about that. Do you think, you analyze in your daily work, like you spend a lot of time paying attention to the science behind candidates, the people behind candidates, the jockeys, you like to say, that are, riding those horses. Do you think that generally, in many cases, that there's good science, maybe there are good candidates, there are good projects out there that may have had a better chance, may have fared better, may have avoided that clinical hold had they been jockeyed by veteran leadership, veteran chief regulatory officers, veteran CEOs?
No question that would help. That would be a contributing factor, right? If you tie two rocks together, it may still not float, but it still, right? But I would say that if you've got the right folks involved, the likelihood of doing things incorrectly, making sure that you've done your preclinical work, that you've asked all the important questions before you've put it into the clinic. I've observed organizations feeling the pressure that they need to put things into a clinic. And, I think there's situations, and I'm not saying a lot of people are doing it, but there are certainly instances of people throwing things over the wall because they need to, and you haven't necessarily buttoned things down. I think younger companies have a tendency to be a little loose with a lot of the early preclinical IND type of stuff that you need to do to get your drug approved at the end of the day, not necessarily for an IND, but those things do provide information. They do help inform. And certainly companies could skip some of those spots, some of those parallel tests in the interest of time. Yeah. Also, I'm not sure how many companies conferred with the FDA. That'd be interesting to understand how many people had regular interaction with the FDA versus those who got clinical holds, and whether or not, it was because they didn't touch base with the FDA and understand what was expected.
Yeah. Well, since you brought the FDA up, a couple questions around the clinical hold phenomenon that we're seeing. If you want to call it a phenomenon, clinical holds are trending up, as we've ascertained. First, give us an explanation. Maybe for those of us who are relatively new to the space and aren't intimately familiar with clinical holds and what they mean. What are they, and what's their impact on sector sentiment?
A clinical hold is something that's issued by the FDA to the sponsor of a clinical trial, and it's a delay, really, generally associated with safety, toxicity, and some concern around that. It could be related to simply a side effect that there's a concern about, something that's been associated with a patient death. That sometimes happens, to better understand whether the death was related to the drug, whether it was related to a comorbidity or something else that could be related that you need to better understand. So those would be some of the things that would be associated with a clinical hold.
When you're striving to excel in a new arena, the best guides are the ones already doing it well. The Business of Biotech brings those voices forward to help new and emerging biopharmas turn their innovations, like mRNA and cell and gene therapies, into clinical realities. Tune in and subscribe for insights on hiring, regulatory, and other need-to-know topics for biopharma leaders. The podcast is brought to you in collaboration with Cytiva. Check out their resources at cytiva.com/emerging biotech. That's CYTIVA.com/emerging biotech. And, so we've already covered, maybe some of the potential sponsor factors on the sponsor side that are contributing to an increase in clinical holds. But I'm curious about your take on the FDA's role or impact on clinical holds. Is that a variable? There's new leadership at the FDA. We're coming off of an unprecedented 12 months in history where the FDA was issuing emergency use authorization, probably at a rate that they hadn't seen before, right? Like it was a tumultuous time for the agency, for an already stressed agency. Does that impact, like you mentioned, you use the pendulum analogy. Is there a pendulum at the FDA, perhaps, to any degree that contributes to this whole scenario that we're seeing right now?
It's definitely a factor. I think, you talk about sentiment earlier. I think the FDA has now introduced a level of risk that was previously not necessarily considered or viewed to be there. Also, I think the reason the seat was open, in my view, for as long as it was before it was filled, was because I think there was a little bit of a debate that was going on behind the scenes, behind what was the posture of the new FDA commissioner. And I think there was a sensitivity about them being too cozy to big pharma or biotech, or the industry, I guess, is the better way of looking at it these days. So I think that, that is the bias, I think, going into this. So I think, the debate around accelerated approvals and the commitments and the enforcement thereafter, I think speaks to that sentiment in many regards. I do think that you have to look at you got to peel the onion a little bit. For instance, about 40% of the clinical holds in the industry recently were related to gene and cell therapy.
Mm-hmm.
So, I think that's proliferated, and that modality is new. And there's as many questions as there are answers. It's probably a lot more questions than there are answers, actually. And I think people are just being careful there, particularly when there's concerns around durability and other
safety for sure. Yeah.
And some of these earlier therapies are one and done. So, if and it precludes being able to do something else down the road. So, there's other considerations there. So I think, I don't know how to read the tea leaves, but I think it's a risk that I don't see necessarily going away in terms of the spirit of sentiment. I think it'll be a little bit of a driver in it. And when you look at the industry, I think we as an industry need to really work on the risk reward in biotech to improve. I think, people, and once you demonstrate the risk reward, I think you will see things that will be a big driver in sentiment at the end of the day. People react to things emotionally, right? Fear and greed. And right now they're reacting to the fear of losing their money. And once you show them that there's an opportunity to make good returns, the greed factor will bring them back to the table.
Yeah. Yeah. Yeah, the greed factor. Does that greed factor, though, especially in the context of regulatory scrutiny, does that lead to a level of risk aversion that stifles innovation? I ask that question because it occurs to me that, hey, if I'm cognizant of the fact that the FDA's job is safety, and then a little bit of efficacy, and I know that my gene or cell candidate, for instance, has a lot of risk around it from a safety profile perspective. Maybe I take another look at that monoclonal antibody or that small molecule because I'm thinking, safer bet, maybe less innovative, maybe maybe less potential for breakthrough impact. So I guess get back to the question: Does that if that pendulum swings too far, can it stifle risky innovation? That risky innovation can be a positive as well. It can it feeds the space.
That's a good point that you raise. I would say you could argue a little bit is that are we a victim of innovation and pushing the envelope a little bit too hard and too fast? Yeah. And that's definitely a contributing factor too. When you have an easier flow of capital and you've got companies that are going out that are preclinical, you're selling dreams, right? So I certainly think that you could be well ahead of yourself on that. And I think if you look at some of the company stocks out there, the companies that sold those dreams, yeah, they're penny stocks at these moments, and that speaks to the fact that the science wasn't there yet. And I think you see that with new modalities, right? This is not new. Anytime you introduce a new modality, it has a high hurdles to prove the merit as a therapeutic class. I think RNAi again is a classical example of that. It was 20 years in the desert, and that speaks to the cycle. It was in and out, late 90s, early 2000, it was the flavor of the day. You roll the clock 10 years later and you're persona non grata, another 10 years. And, it's a promising modality and we just scratched the surface. Yeah. So, I think all of these things are great. I would also say in this environment where capital is king, that the cell and gene therapies are very hard for small companies to take on just because the cost of the drug supply, the drug materials, And, every batch, every one that you run is dear. And as we know, that doesn't always work the first time. So you need to be able to do that. So it's tough. It's in my view, it's a little bit of a big boy sport, but I think the innovation comes from the small companies. You just need to, I think, go back to other things that we've said, collaborate, and again, know what you know and know what you don't know. And I think a little bit of the brain drain and a little bit of what's been going on is that great people, smart people, but they don't necessarily have the seen it, done it, know what good looks like experience. And as our mutual friend Ian Walters often says, picking the right thing to do is 20% of the battle. 80% is figuring out what to do when it doesn't work.
Yeah. That's a great segue to my next question, because Ian and I, have had that conversation. Like we recently had that conversation, and we spent a lot of time talking about it. And, one of the things he talked to me about was what it's like, the loneliness of being a CEO answering to investors when your stock's getting battered. Stock performance is a readout, right, that affects sentiment as well. It can snowball. If things are bad, it can snowball because it's a bet. Look, everyone's getting the same look, so I'm not offending anyone by saying this, but it's a bad look. But how important is that? How important? Everyone's concerned about it in the C-suite, but how important is it in the long run? And what's decelerating it?
I think you got to focus on execution and not let factors like that impact your day-to-day, because when you see it on a day-to-day basis, you can view it as your report card, right? Every day, this is your report card. But if you're doing something that you believe in, you have confidence in what you're doing, you've got information that no one else does. Mm-hmm. And I think you got to be true to your conviction, and I think you got to be, ask the important questions and kill things, because time's the enemy. And I think it's not, I think a lot of people are trying to buy for time to see if, and you can lay off your staff, and and it begs the question, why did you hire them in the first place? I think you need to be focused on execution leanly, and make sure you're funded to something. I think what people need to consider, and I see this as the biggest risk, looking out, is that people underestimated what they needed to run their business. And, they were just grabbing money indiscriminately. And now there's an issue is, are you funded to any point? And, as we all know, things generally cost more money and they take longer. So, there's not a lot of room for error in that kind of environment. In that kind of reality, you really do. I think people are doing high wire acts without a safety net under them. And so I think it's really important to not only capitalize yourself to your inflection points, your milestones, going back to milestones, but you need to be able to go beyond it a little bit too. I think for a couple of reasons. One is you need to be able to, in case the experiment doesn't work, you can't be just totally desperate. You don't want to put yourself in that position of desperation if you can help it. And then secondly, I think people now, and we've touched on it before, that when you do have positive data, people immediately expect that you're going to be coming to the capital markets. So people are kind of shorting you in advance. They're expecting a cover, and you're not. And people who have positions are saying, okay, I'm just going to trade on this and get out, because now this is a day of liquidity. So I think because of that, you just need to be very mindful of managing your cash and investing, really investing in the right stuff, and making sure that, the translational work is done, that, lung cancer is a great market, but have you done the experiments necessarily to inform the likelihood of the outcome? When money was rolling around and the punch bowl was out there with a very low cost of capital, people were less disciplined. and had bigger dreams. Bigger dreams and less discipline is just not a good combination.
No. Well said. So you've alluded to some answers to this next question I'm going to ask you, but if you could kind of help crystallize what the leaders of biopharma can do tactically, strategically, should do in the face of bearish market sentiment. And a lot of what you said is like, good business practice for, sheltering from bearish market sentiment, or being prepared for it. When faced with it, though, I mean, do you have advice like around tactics or strategy, or is there any? Ride it out, man. I don't know.
I mean, it's no. I think there's ways that one should think about spending what limited gas that you have in your tank, and you need to be very prudent and thoughtful about it in terms of how you dole it out. I mean, arguably, you should always be doing that, right? But I think human nature, we know what human nature is. And I think whether you're loaded, because a lot of companies are trading at cash, but they could have a couple of $100 million on their balance sheet. People aren't getting rewarded for their technology. And I think you have to think about yourself. What do you need to do to demonstrate that there's value in your technology? And I think the days of selling dreams are over. So, it's really all about data. We've said this before, in God we trust, in data we believe. So I think it's really for what people can do. I think it requires renewed stringency and more discipline to bring really higher quality products to the public over time. And I think in order to do that, I think there's a level of focus. You can't be everything to everybody. I think people, they're like our kids, they I want this, and this, but our stomachs are bigger than our eyes are bigger than our bellies at the end of the day. And I think that there needs to be more general focus. And I think with that, you can manage your cash burn. And I think the expenses that you need to be gated. You don't want to get too much in front of your skis, because I realized that like manufacturing is a great example. There's a lot of pressure. There's a lot of tension that you need manufacturing slots. Those spots of gear, and can be a real rate limiting gating factor in terms of getting things done. So people sometimes put a lot of money at risk there prior to even having any sort of data. So preclinical or anything. So, you need to be thoughtful about different steps of de-risking before you put money at risk, and being mindful of what that is. And to the extent you can gate that until you can de-risk it somewhere else, would also be my humble suggestion.
Yeah. Excellent. Good stuff. I want to ask you, as we get into sort of the spring, early summer trade show and conference season, can we anticipate any bounces, any blips on the radar in terms of positive sentiment, positive news coming out? We've got AACR just happened. Bio's coming up here. I think Bio will have happened by the time this episode drops, but that's on the radar. ASCO, ISPE Biotech, any number of upcoming shows and conferences. Do they have an impact? Are they an opportunity for the biotech leaders who are going to go there and present to make an impact, and to what end? Totally. I think though these events have generally proven to be platforms and opportunities for people to really kind of pull the covers off and talk about data and what the company has done. So I'm looking forward to ASCO. We are coming out of AACR, so I think that may require us to temper our expectations of how the events will do in terms of driving sentiment. This morning, for instance, I was looking at a tweet from Brad Loncar, and I'll read it to you, and it really tells you what the sentiment coming out of AACR was. According to Brad, the big winner of AACR is a $4 stock that's currently up 24 cents. That's straight up depressing. Yeah. Well, that's not what I was hoping you'd say, Alan, but no, no, it's interesting though. You would think that, so you would think that, I'm going to be doing some traveling this spring and early summer for the first time in a long time. Right. And so are a lot of other people. As these events start to open back up to, in-person traffic and attendance again, you would think that maybe they would hold, I don't know, the fact that we've been pent up for so long and now things are coming back a bit, you think they would pack a little bit more punch.
I don't, I think there's interest, I'm not sure if it's a matter of interest. I think it's really more going back to, how you framed things earlier, sentiment. And, if we execute, if we as an industry, had exciting news, I would look at, news coming out for TIGIT, other things like that to show that, immuno-oncology, some of these new classes of drugs will work. Those things are all helpful. If you have other continued failure, that's going to be disappointing, and it'll, again, people will sell on the good news. If we can squeeze the shorts and change the sentiment and the tenor a little bit by putting a string, let's use baseball, a few base hits together, and just get a little bit of a rally going. I think you get people to pay closer attention. I think this general view that we're at incredible value levels right now as an industry. Valuations have compressed. I don't think, as we've talked on, I don't think people who run companies necessarily are all with that on that hymn sheet. But I think, at the end of the day, if you show a drug that works, the value is there, right? If you can show somebody that's gone PDL negative to PDL positive, you just doubled the checkpoint market. So, I think things will happen when you can do something like that. That's meaningful. Right now, unfortunately, I don't think in 2022 we have been able to, as an industry, really do much in that respect. That's turned heads, that's wooed, that's made a meaningful impact. And I think that's working against us, and that's coming off of the wonderful negative momentum we had coming out of 21. So we just need to change the tenor. So I think those are all great platforms, these conferences, but we need to be singing a different tune.
Do you, I'll ask you one more question on this and then we'll wrap things up. Do you, I'm not going to ask you to, name names or get specific, but knowing what and looking at who you look at and studying what you study, do you anticipate any of that positivity? Do you see opportunities for that tenor to change in the short term, within the year, let's say?
I definitely do. I'm a believer. Everything can't be negative. Just can't. You flip a coin, it's got to come up heads eventually. So, I think there is good science being done. I think there's really the right kinds of work being done. I think it's just a little, perhaps drowned out a little bit based on, again, the volume that we brought to the party right now. So I think, I think it's like a ball that bounces off the table and won't bounce as high. It'll keep bouncing, just not as high. So once some of the noise dissipates, the cream always rises to the surface. So I think there's plenty of cream out there. And I think it's a great opportunity, and it's just a matter of being good stewards right now with your cash, to manage through this storm. Going back to what you said earlier, over the years, there's been good times and there's bad times. And I think that the folks that have been able to see both sides of that have been able to navigate through the bad times. And this is really everyone's true test and the true mettle of everybody. Do smart things, what I like to tell people when you're allocating scarce resources, would you do this with your own money? Mm-hmm. If you wouldn't do it with your own money, then you shouldn't be doing it, in my view. So be smart about it and don't take your investors for granted.
That's a good note to end on. Alan, thank you. Thanks for joining me for this conversation. Thank you for joining me for many of the conversations over the past 100 episodes and being an ally. We're going to move forward, and I'm going to have you on a whole bunch more over the course of the next 100 episodes.
Looking forward to it, and looking forward to episode 200.
Yeah, well, you'll be there with me, and you'll have taught me double what you've taught me so far. Thank you for the education along the way.
It's been fun, and it's been fun to have the support of everybody and those who walk their dogs and whoever, whenever you're listening. But I appreciate the feedback, and it's been fun, and definitely to be continued.
Yeah, on that note, there's nothing more fun than getting mail from folks who are like, you're my treadmill, you're my dog walk, you're my commute, your voice. I equate your voice with these things. It's fun to hear.
Absolutely.
So that's Allan Shaw. I'm Matt Pillar, and you just listened to the 100th episode of the Business of Biotech. Thanks for coming along for the ride, and don't go anywhere because there's lots more to come. We're produced by Bioprocess Online, and we're very thankful for the longstanding support from Cytiva. Check Cytiva out at cytiva.com/emerging biotech for a library of multimedia resources to support your journey. Check us out at bioprocessonline.com, where bioprocessing innovators share fresh knowledge every day, and where I invite you to sign up for my newsletter. Finally, if you don't want to miss our next 100 episodes, subscribe to the pod, leave us a review, share us with your friends. And as always, thanks for listening.